Welcome to the Cherry Beckert Tax Beat, a conversation about tax that matters.
Welcome to this edition of the Cherry Beckert Tax Beat podcast. Today we are talking about working with the IRS in 2025. There have been plenty of headline stories on this topic, both positive and negative, but we as tax practitioners and taxpayers continue to file tax returns, pay taxes, and assist clients with resolving tax notices, audit amended returns, and other work with the IRS. The changes in progress for the IRS are likely to impact both taxpayers and tax professionals in a very tangible, practical way. So, joining in today's conversation are Ron Wainwright, a partner, and Kasey Pittman, a managing director, who both keep an eye out on tax policy developments in Washington. So, how are you doing today, Ron?
Excellent, Brooks. It's a great topic to talk about. And from Raleigh, North Carolina, where unfortunately it's raining, it's a great day.
And Kasey, how are you doing today?
I'm doing great. It's raining. It's raining here in Virginia as well, but happy to be here to talk about this.
And joining me as always, Sarah McGregor from Greenville. Miss McGregor, how's life treating you?
Life is good here in Greenville. It's beautiful. Pollen has started turning everything yellow, so it's going to be a good week to stay indoors and work on taxes.
And I'm Brooks Nelson, partner in Richmond, and I'm in the same rain cloud that Ron and Kasey are in. So not the prettiest day, but we did have a nice weekend, so I'll take that. All right, so we'll walk through some of the announced changes for the IRS and what that may mean for the work of the agency and taxpayers. We'll also address how taxpayers can respond to these changes. And let's get on with it. So, Ron, federal workforce reductions are certainly in the news across all sorts of agencies and departments. What can you tell us about the reduction of employees at the IRS specifically?
Well, Brooks, it's a great question. So from reading, as well as what we know from a administration announcement, there's really three main efforts to reduce the IRS employee headcount. First was the voluntary reduction, which impacted about 6,700 employees, accepting the offer to leave the IRS in May with pay through September. Second is the focus on reducing the number of what are referred to as probationary employees. And those are employees with the shortest tenure. They're still working through their training and supervision time with the agency, therefore the term probationary employees. And then third are the goals from DOGE, which certainly have made the headlines specifically attributable to the IRS. And with the goal to reduce the workforce by approximately 18 to 19%, and an overall goal or a long-term goal of reducing that workforce by about 50% by the end of the year. So these are really the three main efforts that we have read about and we're monitoring and we're seeing come from the current administration.
And to say the least, 50% is certainly substantial any way you look at it. So along with all the employees, we're also seeing changes at the top.
So, Ron, with all these folks leaving the IRS, what areas of the IRS are seeing the losses of personnel or expect to see some of these losses of personnel?
That's a great question, Sarah. So really the voluntary reduction appears to be across the agency entirely. When we focus on the probationary employees, many of these were hired as a result of funding for enforcement, which took place in the Inflation Reduction Act of 2022. However, it appears that perhaps most of these employees are really split between the LBI division, examination, and the small business self-employment division. Where the additional workforce reductions will come to achieve that 18 to 19% and then the overall 50% is really going to become evident over time. And when the IRS makes their announcements in regards to reductions in workforce.
All right, so Kasey, we're talking about the reduction in the troops, but we've also seen changes at the top. So what can you tell us about that?
Yeah, so once Trump became the president-elect, he announced that he was looking to replace the then IRS Commissioner Danny Werfel, who was not even halfway through his 5-year term, which is it's pretty odd. It's not something that happens usually when an administration changes over. But he did announce he was looking to replace him with former Republican Representative Billy Long. And so in anticipation of that change, Werfel resigned on Inauguration Day. So Billy Long is now set to come take that top seat and finish out the remainder of Werfel's term, which goes through November of 2027. There's not a lot of movement actually on Long's nomination in the Senate right now, but it does still seem to be on track. It's just not the highest priority in terms of Senate confirmations at the moment. So we're looking to see Long probably confirmed in the next month or two. In addition, we've had a little bit of turnover in who the acting commissioner is. So when Werfel stepped down, Doug O'Donnell stepped in as acting commissioner. He was actually just recently replaced by Melanie Krause. Melanie is going to be the deputy commissioner once Billy Long is in place, but for now, we are on our third commissioner since January 20th, 2025. She'll sit in the seat, and then we'll move down into that deputy position once Long is in place. In addition, just a couple other changes. We saw a change in IRS Chief Counsel. William Paul was just recently replaced with Andrew DeMello about 2 weeks ago. And then in addition, the Chief Taxpayer Compliance Officer departed just this past Friday. No replacement has been named yet. So we are seeing a lot of turnover in those top positions. And we know those top positions really do set the tone for operating priorities for the office.
So, Kasey, any general observation on trend or philosophy of this leadership change, or is there any pattern or anything else you can observe from who's replacing whom, or is it too early to tell?
There has been some speculation. I will leave it at, as speculation, but it seems as though President Trump is looking to have people in seat who really are completely aligned with his vision of a reduction in the force at the IRS, in addition to prioritizing his key areas for tax reform and guidance issued on both existing and what he's hoping to have in terms of new tax law. So it does seem to be that we are looking at people going in seat who are most closely aligned with the administration's overall goals.
Well, Kasey, that brings us to what might be the IRS's priority guidance plan. In anticipating a tax law coming at the end of the year, I know the IRS will be focused on any new law that comes from that and putting out regulations or notices or revenue rulings and revenue procedures for that. But in the meantime, we still have some goals and needs. What are your thoughts on the IRS's priority guidance plan?
Yeah, so the priority guidance plan comes out every year, and a lot of times I refer to it as the PGP, but it's used to identify and prioritize those guidance projects. As we know, at least CPAs know, and I believe many of our clients do, the devil is in the details, both of the actual law that is passed, but then, I like to reference 199A a lot. 199A came out as part of Tax Cuts and Jobs Act. It's 13 pages. There's like triple spaced with the widest margins you've ever seen in your life, right? And from there, we have this massive deduction. And so we need a lot of guidance. And we have hundreds of pages of regulations that have resulted telling us how to interpret this guidance, in alignment with the Treasury's interpretation, as well as what they believe congressional intent was. So guidance is really important for us as practitioners and for taxpayers as well. So the priority guidance plan comes out and says, hey, this is what we're going to prioritize for the year. We're going to spend our time working on these guidance projects. And the guidance can be in the form of regulations or rev rules or rev procs, or there's a whole wide array of guidance forms that guidance can take. But so we expect some changes here as Treasury and IRS leadership change, sort of as I alluded to, right? We're trying to get those in line with the administration's priorities. So there will be some aligning there. In addition, there will be some new priorities if Republicans are able to get this tax reform bill over the finish line. We're going to have guidance for any provisions that are new or significantly altered in order for CPAs to interpret and appropriately report on that activity.
Great, thank you.
Well, can I just follow up, Kasey?
Yeah.
I mean, are they going to find themselves in a catch-22, desperately needing workforce to issue guidance, but yet sitting here reducing the workforce? Or do you think they will be able to round up the horsepower to get the guidance on what they want and just cut back on other areas?
So I will tell you from my dealings with Treasury and the IRS, which is probably true of many different industries, we see a final package, and whatever we anticipate went into creating that package, at least 10 to 20 times the effort went into it. The number of people who have touched this and the alignment that's happening inside the agency is I think well beyond what most practitioners and taxpayers fathom. It takes a lot of work. So I do think that if we see cuts that are too steep and or not really thoughtful, then we could wind up with a workforce that can't produce the amount of guidance, a Treasury and IRS workforce that can't produce the amount of guidance that we need in order to, effectively interpret and particularly new tax law. So we do run that risk. I do think that should that happen, it would become evident, and I am hopeful that there would be a course correction, but it's all just a guess at this point.
Yeah. It's not only high level guidance. It can be as simple as revising forms or creating forms necessary to do some of this stuff as well.
And I don't think people realize forms are updated every single year.
Right. And speaking of the software that interprets those forms, Ron, with the plan to reduce the IRS's workforce, there's also been this twin attention given to technological answers to take the place of the need for so many people. But along those lines, the IRS has announced a pause in its technology modernization activity. You want to speak to that a minute?
Yeah, Sarah, that's a great question, and it certainly has made a lot of headlines. So when you think about the legacy systems of the Internal Revenue Service, they really need to be updated to the 21st century. I think everyone across the agency, the administration, as well as Congress would indicate that the legacy systems of the Internal Revenue Service have not really been keeping up with the technology and the modernization that has occurred. We did see within the Inflation Reduction Act of 2022, very similar to my comment about the funding around the workforce of the IRS, there was also funding to the IRS to really help with technology improvements. Specifically called out were recent upgrades in taxpayer accounts, digital file sharing, and really a lot about communication, more proactive communication. I think a fair conclusion or takeaway is that with a smaller workforce, the agency will need to lean in heavily into technology solutions and support to maintain and really increase the IRS's proactive as well as reactive communication. One thing that has caught the headlines recently, specifically with DOGE last week, was the conversation, I shall say, that was had by DOGE and potentially getting rid of what is referred to as the free IRS direct file. And so despite the popularity of this, the IRS direct file program really is unclear underneath DOGE or the Department of Government Efficiency. And is that an area that we're going to see more technology solutions and really a replacement of the direct file. Now, it is interesting to note that when the current president became president, he indicated that it would be in place for the remaining part of this tax season, that being the 2024 tax season, filing into 2025, and really that April 15th tax filing deadline of individuals. So as a reminder, the direct file was rolled out as a pilot program in 2024, really after the IRS was looking into how to create a direct file system as part of the dollars that were received from the Inflation Reduction Act. Now, we know that a lot of those dollars are being redeployed, which was signed and really directed by an executive order of current administration. And so, again, it's going to be here. But just as a point of information, the IRS accepted about 140,000 returns filed by taxpayers using the direct file program in about 12 states. And that was just kind of last season, that being the 2023 filings in the 2024 year when it became a kind of a pilot program. It has been expanded now to include half the country this year. However, as I commented, it's really unclear how many taxpayers are going to be able to utilize and really effectively utilize the technology, recognizing that that is a DOGE item that could be changing from a technology perspective. But there's clearly a need for the modernization of technology. I think the current administration recognizes that, as well as the current Secretary of Treasury, Scott Bessent, has come out and stated that his commitment during his January confirmation hearing is to maintain the technology and enhance the technology of the IRS, as he received a number of questions in regards to his thought process as Secretary of Treasury.
All right. So, Sarah, with all these significant changes to the IRS, how's this going to impact taxpayers and tax practitioners?
Well, as Ron just mentioned, the technology changes and transition is still a work in progress, and the agency continues to rely on people to fill in those blanks where it's needed. So we can expect more difficulty with fewer people there at the agency. We can expect it's going to be harder to reach a person that we would need to resolve an issue or answer a question or handle correspondence that comes in. It's just going to take longer for all of those things to take place. So expecting a slower response time, a longer time for horizon for, say, an IRS action to resolve a notice or a processing, or to waive a penalty, or even to issue a refund on an amended return or a refund claim. So I think the time it is going to take, because the number of taxpayers and the number of questions and concerns, the number of businesses, the number of individuals continues to grow. And so the number of individuals, if you think there was 180 million tax returns filed, and we only have presently less than 100,000 employees at the IRS, and we're going to have fewer than that. That means we're going to have to share. All of us will not get our own IRS employee. We're going to have to share. So I think just anticipating a slowness and planning in longer margins of time for things to take place will be very important to managing our expectations. But Kasey, not everything in the news is negative. Earlier this year, there was a draft bill released that caught everyone off guard and was a nice surprise, with some really helpful provisions for both the taxpayer and tax practitioner community. You want to talk about that?
Yeah, I'd love to. Actually, I'm extra excited about this. I do a lot of volunteer work with the tax division of the AICPA, and this is something they've been excited about for months. They were They'd been working behind the scenes and were very happy when it was released. So yeah, this is the Taxpayer Assistance and Services Proposal. It's a discussion draft of a bill right now. It was released with bipartisan support. The chair of Senate Finance and the ranking member, Senate Finance Chair Crapo and ranking member Wyden, they actually just switched spots when the Senate flipped control here at the beginning of the year. So this is a discussion draft, as I mentioned. It's open for public comment for about another week until March 31st. So if you've got some comments, I encourage you to submit them in that time. And it touches a ton of different areas of really just filing and dealing with the IRS and tax practitioners. There are some taxpayer protections and relief from certain issues, including one of my favorites here is the information that has to be disclosed on the notices that taxpayers are provided. There are modernization efforts, and one of my favorite item from this is the IRS developing a callback function where, like sometimes you call a service number and you can press 1 for a callback instead of waiting on the queue, and they'll call you back, when an agent frees up. So that would be a very welcome change from my perspective. It gives the taxpayer advocate more autonomy. It changes estimated payment dates so that they're consistent. They're actually 3 months apart. So June would become July and September would become October. And then there's a bunch of other improvements to IRS administration, including oversight and appeals and essentially how taxpayers and practitioners deal with the IRS. So I think this is a really promising bill. I love the bipartisan support and the way it was rolled out. I'm really hopeful that Congress will work together to get this passed. There's almost no revenue effect here, so hopefully it's a slam dunk for them. But yeah, if you have any comments, you've got a week to make them.
Well, my main comment is anything that seems so logical and rational is bound to have a hard time getting passed in Washington. So we'll see. We'll see. Maybe I'm being too cynical. All right.
Cross our fingers.
Yeah. All right. All right. So let's go to final comments, and we're going to try to put it under the theme of best practices for working with the IRS. So we'll turn the floor to you, Ron, first.
Well, as you have listened to our Tax Beat podcast, you recognize and realize there's a lot of uncertainty surrounding the Internal Revenue Service as we go into this busy season, if you will. And so I think it's a real critical step to really manage expectations of when something will be answered by the IRS or in fact resolved. We've had experiences where we will correspond and we'll get correspondence back in 3 months that said, can you give us another 3 months to respond to your initial letter? I think when you're planning your calls with the IRS, make sure you have everything ready that you will need to interact with that individual on the return or on your return or on the matter that you're going to be discussing with the IRS. And so I'll turn it over to my colleague Kasey, as she'll probably have some ideas on best practices as well.
Yeah, I think as the IRS goes through this transition period of, decreasing their workforce and attempting to modernize their systems, it's going to become increasingly important that all of your information is turned into your tax practitioner and it's all appropriately included on your return. I think it's going to be better to file for an extension and file late than to file on time and then have to amend. Having returns and information as accurate as possible is going to reduce notices and your need to deal with the IRS. So I think that's something we all like is to minimize the amount of time we have to spend on the phone or dealing with agents. So I would stress the importance of really having a handle on your tax documentation and situation and working with your practitioner to make sure that you're as accurate as possible when reporting.
All right, Sarah?
I would say from the practitioner side and from the taxpayer side, it's getting harder and harder to prove certain things when the correspondence or the responsibility is on the IRS to maintain the records. For example, when a return might be paper filed or when a payment was made that wasn't through the electronic system, tax payment system. So I would encourage taxpayers to keep very good records of every event, use trackable mail systems whenever that's necessary, to keep up with when events are happening. And also from a tax practitioner side, getting powers of attorney from clients so that we can interact for them and doing everything we can to get to the front of the line and make it as easy as possible for those handling issues for us or working with us at the IRS to get those resolved. Handing them a proposed response or a proposed answer or something that they can move quickly forward into a conclusion, I think hopefully will help keep the time constraints in and move things along as efficiently as can be.
Okay, I'm going to go a little zen here and say the best practice for working with the IRS is recognizing you may not be working with the IRS and you may not be getting communication or guidance from the IRS. So, I would encourage you to work with qualified professionals to avoid as much potential controversy or things that will flag. And also, if we get this tax legislation, which I think most people think we will get, and I'm hopeful we will get some fun stuff. It also provides you opportunity to take positions that are reasonable within what's being passed. There's not going to be immediate guidance, and that also gives you a lot of opportunity at that at that point in time to apply the laws and I think what would be taxpayer friendly ways. So there are some opportunities, maybe some positives here. All righty, that's a wrap on this discussion of working with the IRS in 2025. Thank you for listening in. A quick disclaimer that we are not providing tax advice on this podcast. Please consult with your tax advisor, hopefully at Cherry Bekaert, with your specific tax issues or to discuss information from today's podcast. Check out the firm's website at cbh.com for the latest guidance and materials on this and other tax and business topics. This concludes today's podcast. Please like, share, and subscribe. Thank you, Ron. Thank you, Kasey. Thank you, our listeners, for spending your time with us. We truly appreciate it. Let's call it a day and go forth in peace.